Well, okay, we did request PPP funds. The dollars are small, about $8,000. I utilized it for the purposes of labor costs, in other words, payroll. They did change the rules quite a bit on the PPP, where initially it was a 75-25 mix for payroll. Then they dropped it down to 60-40. The non-payroll stuff had to be like rent, utilities, but you couldn't do it like, oh, I'm going to buy office supplies.
Okay, is Payosha on the call? Payosha, are you there? Okay, this is something for discussion for you guys. She says, I'm lost when it comes to Schedule C and PPP forgiveness.
I'm here. Sorry.
Oh, are you? Oh, take over, Payosha.
Oh, okay.
It's right on the screen.
Okay, so I was doing some research in reference to the new requirement to have a statement added to the tax return if someone received a PPP loan and was forgiven for it. So I was doing some research. At first, I didn't know anything, but I continued doing research and found out that all we had to do is write a statement and attach it to the tax return when filing the return, stating that the client received a PPP loan. So that part, I received the information for on the 1040 2021 instructions on page 23. My problem after that was I got real confused and couldn't remember anything about how we're treating expenses from monies. I mean, for items that were used from monies that came from the PPP loan. So on page 23 of the term, of the 1040 in the instructions, it states that the forgiveness of a PPP loan creates tax-exempt income. So also although you don't need to report the income from the forgiveness of your PPP loan on Form 1040, you do need to report certain information related to your PPP loan. And it's associated with Rev Prop 2021-48 and 2021-49 and the Internal Revenue Bulletin, I guess, 835. And it says it permits taxpayers to treat tax-exempt income resulting from the forgiveness of PPP loans as received or accrued. And to the extent that eligible expenses are paid or incurred. So my thing was, if they didn't have, so this is for Schedule C, I must say. So for a Schedule C, if a person is filing, received a PPP loan and they were forgiven, they don't have to report the income. Now, if taking the expenses on monies that were used that came from a PPP loan, it could put that person in a situation where they have a loss. And that kind of threw me off. So I'm not exactly sure how to go about it. Because otherwise, if a person was going to have a taxable income, but now they're able to deduct the expenses from proceeds from a PPP loan, and now it can put them in a position where they have a loss, is that okay? So that's where I'm actually stuck at this point.
Okay, Richard, I see you know the answer.
Well, okay, we did request PPP funds. The dollars are small, about $8,000. I utilized it for the purposes of labor costs, in other words, payroll. They did change the rules quite a bit on the PPP, where initially it was a 75-25 mix for payroll. Then they dropped it down to 60-40. The non-payroll stuff had to be like rent, utilities, but you couldn't do it like, oh, I'm going to buy office supplies. It was very specific on what could be deducted. We eventually learned down the road after the IRS and I guess the SBA and everybody else that they changed quite a bit of the reporting on it. Eventually, our office learned that, oh, guess what? You are forgiven on the amounts that you received. The areas where there were discrepancies was whether or not how you deducted the claimed costs or expenses against the PPP. In other words, the issue of potential double dipping. So say you have, a $10,000 PPP, and you were able to validate, say, 7,000 as payroll and 3,000 as rent utilities. Okay, that would have satisfied the reporting requirements for the PPP. The debate was, could you utilize the same expenses as part of the business for the tax year? That was the gray area that was done with that. Well, when they did the forgiving, my interpretation of that was, okay, do I have to do any reporting of the PPP at all? Because it was basically like free money. Kind of like we're talking like all the stimulus everybody's getting for 1, 2, and 3, and the advanced child tax credits, in the sense it's like it's not all taxable. Still, it's up in the air how I'm gonna kind of look at it, because I have to work on the taxes on that myself, is I could potentially say that, okay, I have income, PPP income, and then treat expenses as normal and just say, okay, the PPP is like regular income. Then that would be my interpretation.
Yeah, Carissa, what did you say?
That's my interpretation too, because I mean, as much as we all know with the IRS, they don't really like the whole double dipping kind of thing. And if we're not showing the income, then we really shouldn't show the expenses. But if we're going to show the expenses, because like most of those things are payroll, right? So your payroll, your books really need to match your W-2s and yada, yada, yada. So I'm just putting them on the income as other primary income, and then taking the expenses. That's how I've been handling it, only because they change it every time you turn around. And so I think I would rather be safe than sorry. I'm kind of conservative though.
And your PPP was forgiven, right?
Yeah, the one I'm talking about was 25,000. Yes. And then, but the wages and everything that were part of it are still on the books because they paid for it.
Right.
So I just think that if we don't show the income and it's tax exempt, then I think you shouldn't show those expenses.
But so my problem is I'm trying to find tax law on it, because I wouldn't want to put income on my client's return that he or she does not have to claim. That would be like a disservice to the client. And I see, like with a lot of these rules that's been being handed down have been like a situation where
I see Richard up top with the hand up.
we didn't make the rule. We did. It's the same thing with the like the child tax credit, the advanced child tax credit. There's the way the rules are made is like, all right, if this year you filing separate, it's going to seem like you're going to get extra money, but it's like the way the rules are made, it's okay. It's not illegal to do. You know what I mean? So I'm just trying to find tax law on it that states whether or not we can use the expenses, because I wouldn't want to put it on there out of fear.
And that's the thing I've looked for too. I don't think we're going to find it. They're making it so vague and gray that I've looked too, because I had that situation. And then on the child tax credit, to back up what you said on that, you have to be careful on the child tax credit, because even though like you have two people that can claim a child alternate years, it's very possible that that other person that had that advanced child tax credit will have to pay that back, which falls back into my reasonable conservative thinking, saying that maybe we shouldn't take the expenses if we don't, if we don't take the income. So some things like the recovery rebate credit, yeah, that's fine. They're giving all that away, but I don't know. I just find like, cause some of these PPP loans are huge, I mean,
Yeah.
my little one that I'm dealing with is 25,000, but there's some really large PPP loans out there. I just don't see that the IRS would let people get away with,
Yeah.
$1 million of you don't claim the income, but you can claim the expenses. It doesn't make any sense. That's me, but.
Okay, my name is Richard Lovejoy, and we do several corporation S corps, which had PPP loans last year.
Yeah, let me have, okay. Richard up top there with the hand up.
That's me. Richard Lovejoy. A New Leaf Company. A New Leaf Company. Can you hear me?
Yes.
Yes, we can hear you.
Okay. In the research that we did and the seminars that we attended, if the loan is forgiven, it is not taxable income.
Yeah, go ahead, Richard.
And if the
Can you hear me, Richard?
and yes, I can. And the expenses are deductible.
That's correct. Richard is correct.
Hello?
The only
I
place
found the
Yes.
IRS
I
ruling.
can hear you.
Now, this is for a corporation. This was not for a Schedule C, but I would assume that it would be similar for a Schedule C as it would be for a corporation.
Can you repeat that? I'm sorry.
Okay, if the loan is forgiven, the income is not considered taxable income, and you can take the expenses on your tax return.
That's what I heard.
that is correct.
And we filed probably 15, 20 tax returns where that was the case. And for 2020.
Do you have a code on that?
All I can tell you is the seminars
posted
that
it.
we attended, I could look up and see where that came from, but we researched it quite extensively, and that was their conclusion in terms of how it could be taken.
Look in the comments. I just posted the law and the code.
Andrea actually had a training on that, I think last Friday or the Friday, on how to report it on your on QuickBooks.
But
And
I
it-
think that Peosha's question, it's on the schedule, because for an S corp, it goes under other income. I did attend Andreas because I had a question about that. That goes as other income on the P&L below the line. So when you file your taxes on an S corp or corporate or partnership, there's a specific place where you report it as non-taxable income. But I think Peosha is asking, well, how about the Schedule C? Where exactly do I drop that number on a Schedule C to show up, but to be non-taxable? I think that's your question, right?
No, I wasn't going to, I was just gonna attach the statement and not, for the Schedule C, I wasn't gonna include the income at all. I
But
think
you were
this-
going to report it on some sort of a statement just to protect your.
Well, yeah,
Right.
that's the law now. That's the requirement now. Yes. I was just trying to figure out if someone was forgiven for $20,000, or I would say $10,000, but they had expenses of $15,000, they're going to generate a $5,000 loss. And that just seems like it's like an extra benefit that they're getting, which I just wanted to just be clear on that before I press the send button to make sure that that's
So your client
allowed.
has W-2 income or other sources of income that is being offset by this loss.
Yes.
I just put it in the comments.
Exactly.
I put the law. So if you
Oh,
want.
let me check. Let me
Yeah,
check.
so
Well,
in the
that's one
comments.
that's one revenue ruling. There were several revenue rulings on
Well,
this last
Yeah,
year.
that's what I'm looking
So-
for, a revenue ruling.
Well, this is a revenue ruling that was issued. This is right from the IRS website. It's the current one that they have. So that's, as a tax preparer, this is what I have to go with when I file my taxes. Or when I file clients' taxes. And if it changes, we do amendments. I mean, I'm sure they'll send out letters, but I'm gonna go with what the most current stuff is.
So Bowen, on the Schedule C, you're just not reporting it at all?
I don't do that. I still report it because I don't want there to be any, I don't want there to be a letter later that says, hey, you didn't report anything. So on a Schedule C, I put it in as income, as other income on the 1040, and then I back it out with an expense, but I label it as tax exempt income. And then I write a note in my statements that gets sent to the IRS with the e-filing and explain the whole situation.
Oh, okay, so you are reporting it on, you're reporting it as income and then backing it out as an expense.
Yeah, I still report it just to be safe so that we meet reporting requirements and that I can prove, hey, we're doing everything we can to make sure we tell you everything. And then we back it out and then I explain it.
And you back
to be
it out
safe.
as other expenses?
So like I usually put it on the income menu, it'll say other income and I put it in there. And then right after that, it says other income, I put a negative number. So I listed the income and then I put a negative number that matches. So that's right in the income and is reported on the 1040. And then I write a statement where under my miscellaneous forms, I'm allowed to write a statement and hit attach and send to the IRS. And then I make sure that that's sent.
Okay, but it's still on the Schedule C under income.
No, I just do it on outside of the Schedule C, just in the income menu in my software. I don't put it in the Schedule C.
Okay.
That's what I do. And that's what my software, I called them and asked them, where do I put it? On a partnership, it's very easy, like you said. That's what they told me to do for that when I don't know where to put it. That way I meet reporting requirements. I mean, I'm just going off where they told me to put it.
Well, I've been putting it on the Schedule C and taking it off the Schedule C.
And that's fine. Just back it out with an expense.
Yeah. The thing is that
I don't know. I think it like doesn't matter
the,
where we report it. I think as long as it's reported and then it's backed out.
I think, and I don't have a client that qualified for this, but for the and now I'm at a loss of what it's called. So when you do the wage, like when you have the what's the word I'm looking for? If you excluded the income for the PPP loan and you used it against wages, you cannot use those wages for the wage reduction credit, or for the business credit. You know what I'm talking about, Bowen? So yeah. That's the only place where you can't double dip. Yeah,
you mean the ERC, the employee retention credit? Yes, for the same quarter, that is.
Right.
You can't double dip within the same quarter, but you can still use it if you didn't use the ERC in that quarter.
Right. But I don't have anybody that qualified for that anyway.
Yeah.
So let me ask a question. While we're on the credits and what they're giving us and taking back and whatever, on the ERC credit, it's kind of going the way that I was saying it a while ago, where I was thinking logically, because if you get the ERC credit, you can't use those same wages when you're doing the tax return, correct? Don't you have to back those wages out and you can't take them as an expense?
Yeah, that's correct. You cannot take the same dollar for both. The same wage expense cannot be used. So if you already took the retention credit on that wages, you cannot use that same dollar of wages for the PPP loan.
So how would y'all report that? Would you put the credits that we got as income and then just take the wage amount? That way all your W-2s still all tie out and whatever?
I think, don't you report the credit on the 940 ones? No?
Do we have to show any of that money?
To get the credit.
Huh?
I thought payroll was supposed to apply for that credit, but if they didn't, you could do it on the tax return.
Yeah, I thought that when you submit your payroll reports, the 941s, where you report your wages and your withholdings and your portion, this already calculating the credit, I thought, but I could be wrong.
I actually haven't done any of them, so I'm probably wrong.
I haven't done any either. And that whole thing, like, if they ask me about it, I tell them call their payroll company because they're the ones that are
Right.
responsible for it. Because I don't want to mess that up.
Yeah, and I guess that's kind of where the logic, I mean, even with all the stuff that we read, the logic behind, like, they're not going to let us use the wages as an expense on the tax return that were used to get the credits for the ERCs. So I guess that's why, even with everything that I've read, even just what we're talking about tonight, I'm still feeling conservative about this whole PPP loan forgiveness stuff, because they're like, they've changed so many times, we don't even know what it is.
So I just looked at in my software, apparently there is a statement that you can generate that will populate
Mine's
revenue procedure 2021-48, where you can report it. But I don't know if that's my software. I use ProSeries, so I don't know if yours will do that. But apparently there is a way to generate a PPP loan forgiveness statement. And it says this program will generate a revenue procedure 2021-48 statement that you can review and attach to the return.
Was that in your software for Schedule C or for?
For a Schedule C, you can use that for a Schedule C, E, or F. So that's ProSeries is generating a specific statement to report for PPP loan forgiveness, which will attach that revenue procedure 2021-48. But I'm not sure if that is, if other softwares are doing that as well.
I guess I'm lucky. I haven't had clients that have lost that much money. They all made more money. So they had great years, so they didn't meet the requirements.
Okay, I'm back.
Oh. Hi, Glenn.
All right.
I put in the comments the answer to that depreciation question. Sorry, Glenn, I know you wanted to wait till next week, but.
No, not a problem. No, go ahead.
It's just straight from the IRS's website. I found it in publication 587. So I just copied and pasted into our comments, or not our comments, but our chat. It says right there. So it says you do have to account for depreciation. Basically, at the very bottom, though, it says you do not have to reduce the gain by any depreciation you deducted or could have deducted for a separate structure for which you cannot exclude the allocable portion of gain. I think that's where maybe there's confusion, because if somebody built a separate structure on their property as a home office, then you won't have to do the depreciation or depreciation recapture. But if it's a room in your main home, then you are obligated to depreciate. And if you don't, you still have to do recapture for what you were supposed to.
Right.
Even with the simplified method, or I didn't see the note you did. Even if you do simplified, Bowen?
No, if you do simplified, you don't have to do any of that.
Okay.
And it says you can alternate. You could do like simplified this year, the standard the next year, and then you could go back and forth.
Okay, excellent. Hey guys, I want to apologize. I'm having extreme weather problems here, so I was lost for a few minutes there. Are there any other questions that you might have or want to discuss before we leave?
I have a question.
Okay.
Sorry, I know I talk a lot, but I've never encountered this before, so I need some help just to make sure I'm doing this right.
Okay.
I have a couple. The husband works in California. The wife lives and works in Oregon. And these are both two tax law heavy states, right? Oregon and California. The main domicile for both is Oregon. The husband earns all his income and works in California. So I was going to prepare their tax returns, and I know they both have their own rules, where the wife's income is completely reported and taxed in Oregon. The husband's is reported and taxed in California, but that's it. You know, I allocate it or separate it by state. Does anyone know any different?
Their home of, well, their home of record though is Oregon, right? He just commutes back and forth to California, correct?
Yeah, their home of record is Oregon. They moved there in April of 2021. So they're like a part-year resident for 2021.
Where did they move from?
From California.
Oh, okay. So they created a home of record though for Oregon, correct?
Yes.
Okay. All right. Who can help?
Owen?
Yes,
What does the W-2 say for withholding for the states?
His W-2 only shows California withholding, and it withheld taxes. It doesn't show anything for Oregon. And his
No.
address is still California, like on his driver's license and his W-2.
You would have to file that return in California in order to get the withholding taken into consideration.
But
Right.
you
My
said that
concern
he's
is
in
I want to make sure I don't have
California.
to report any of that income to Oregon, is what I'm worried about.
I don't think so. I mean, you may,
Does
He
he have
isn't
a
a part-time
residence in
resident.
California? Or does he have a residence in California?
So he's a firefighter. So he flies here, he'll work for like a month, and then he'll fly home for 2 weeks. And then he flies here for a month, works, but he's at work the whole time. So he did 245 days in California, but he was always at work, and he does not have a residence in California.
Right.
But he lives at the firehouse. I mean, that's their residence. I mean, that is their residence, is their firehouse.
But being at work, that doesn't really, right? Doesn't that not count as a resident day because you're at work?
So he's an Oregon resident and a non-resident of California. He just happens to be working
But
here.
the income is taxable to California, the
Oh,
entire
yeah.
W2 income,
Yeah.
right?
Yeah,
Correct.
absolutely. Yeah.
I just want to know, and I tried to look it up on Oregon. I tried to do a bunch of research. I just can't find anything that says it is or isn't taxable in Oregon. And if I
No.
don't report it in Oregon, I don't want to.
What will happen is there'll be a credit if it is taxable in Oregon. There'll be a
Yeah,
credit.
I think that you should report it as taxable in Oregon, but take the credit that you already paid taxes in California.
Right.
So that he doesn't end up paying double taxes. And I think California has a higher tax rate than Oregon, so.
Much higher. Remember last week we
Yeah.
showed you the map? It's much
So
higher than
he won't-
Oregon.
But I think to be safe, report it and then back out the taxes, and then he won't be paying taxes on both.
I think so.
I tried
too.
that in my software and he was getting killed in Oregon. Like for some reason it wasn't,
But
I don't know if
But
California, Oregon don't have a tax agreement or what, but, and maybe I was
they
probably doing it wrong,
do,
but
I do, yeah, I have done taxes and they do have, Oregon will, and vice versa.
Yes,
And they have reciprocity agreements.
absolutely.
Is the program calculating the credit for taxes paid to other states?
I thought it was.
I would check that because it sounds to me, because
Yeah.
we have a lot of that in Louisiana. I have a lot of welders that work all over the state, all over the United States. And I do a lot of those multiple states. And some of the, like the program this year, it doesn't, is it this? Yeah, it doesn't do the credit for the other states. We have to go and actually input it. But the software last year automatically calculated it for me. So be careful. It might not be taking the tax liability to California and pulling it to Oregon.
Right.
Okay.
Correct.
Does it matter if he was not in Oregon, like he was only in Oregon for 2 months?
No, but that was his home of record.
Yeah, you
Or-
have to
But
pick,
he's
you have to
has-
pick
yeah.
one of them. Yeah,
His tax home,
Um,
that's his tax home.
yeah.
I just looked it up. California and Oregon, they do have a tax reciprocal agreement, so.
It's
Okay.
probably just the software. What you
So I have
using?
to, I use two. I use Drake and I use TaxSlayer Desktop. Depends on the complexity of the return.
Because Drake's not doing it for me.
Okay.
Is that where you're doing the tax return?
I've done it in both and neither one did it.
Yeah, it's not doing it. Now, like I said, last year my software did it for me and I was like, oh yeah, but then I decided to go to Drake, and I mean, for a reason, because there was some other things the other software didn't do, but it did not do a credit for the other states a couple days ago whenever I did a tax return.
That's probably
Yeah,
what it is.
and
I'll
Oregon
double
will
check
give
because
you- Will give you credit for the full amount. I mean,
Yeah.
he will not give you credit for more than what you owe Oregon, but it will give you credit
Right.
for the full amount.
I'll
Right.
double check. It probably didn't, because yeah, the same thing last year, those credits were automatic. So I'll make sure it's putting those in. That's probably what it is.
That's
I was
probably
just
what it
like,
is.
it was disturbing how much he owed Oregon. I'm like, oh, this is wrong. So,
Well, over
thank you,
here,
everybody.
we have a lot like the Louisiana, we have a tax, a sales, state return, and then Texas is right next to us. So these welders go to Texas all the time and they don't have a state tax return. So I see that a lot, and then they get burned because there's no state tax that they're paying in Texas. So the Louisiana returns that you call them and tell them that, and they're like, whoa.
I have a question. Someone asked me today if they didn't receive for the state of California, their STIMI from the state of California, how that would possibly be recovered. And since I haven't actually seen that in my return come up at all, I was I didn't know the answer. I didn't even think of it.
I heard that you couldn't recover it. That's what I heard.
That you
But
cannot.
yeah, that you could not.
Okay.
But because they're supposed to still be sending some of them out.
Okay. Thank you.
Yeah, because there's two
Okay.
versions. There's two versions. There's the Golden State 1 and Golden State 2, and depending on the level of income, can make a determination. But it's all administered by California, and you had to file a 2020 tax return to get the Golden State stimulus.
Okay. Thank you.
All right. Yes,
I have
Carissa.
a question. Okay, so startup costs and depreciating and whatever. I have a situation that I'm going through right now. I have a guy that opened up a trucking business the end of 2021. He, obviously he has his startup costs, his LLC, all that, all that stuff. He bought a used 18-wheeler truck, okay, 20,000. So in a situation like that, when they spend so much to start the business, is the truck used as depreciation? Or is the truck considered a startup cost? Because I cannot find specific details as to how we are supposed to handle the truck. Because everything that I find, the truck is like a, what is it, 1245 property where you depreciate it over the life of the asset. So how do we make that determination? How would you guys all make that determination in this kind of weird, like spend a whole lot of money all at one kind of time thing?
I think that for a startup cost is only organizational costs, and
That's what I thought too.
The other, there's two types, organizational and I forgot, but
Yeah, you have your
operational, I think.
startup and your organizational, right?
But I think that in your case, he can take a bonus depreciation or a 179 on that asset.
Yeah, that's what I was gonna say.
Just don't worry, don't mix it up with the startup cost. Just take a straight up depreciation full year. I mean, 179 if it was placed in service in 2021. Even if it's used, they change that you can take that 179 on the asset.
Okay.
For the year placed in service.
3-year property anyway.
Wait, say that again,
So-
Tammy?
The truck is only a 3-year property. Because those things get so many miles on them that you depreciate it over 3 years. So even if you take the 179, he's getting that big chunk, and if he's got anything left over, it rolls to the next year.
Okay, so let me throw another twist in there. So because it was the end of the year, he really didn't make any hauls with it. So there's therefore zero income. So how far would you go with that one?
But if
Well,
there's
has
no
he got other
income,
income throughout the year?
Wait, say that again?
Does he have more income throughout the year that it's going to offset?
No, he really started making income like here recently.
Okay, so he didn't have a W-2 or any other income from any source?
Oh yeah, he has plenty of income, and that's kind of where my problem was. I think I have 80K to get rid of on just stocks and bonds. So I
would put it in as a depreciable asset, section 179, and because anything that it can't deduct this year, it will roll to the next year anyway off that Schedule C.
Because I could use the whole value of to do this, the special deduction, I could use the whole value to get his tax liability down. But I was scared because of the no income, because of the brand new business. I was scared to take that approach on it, and then it'd be overkill.
but then he has other taxable income then that you can offset.
Yes, he has plenty of taxable income. Yes.
From business, from what does he do from like employment?
Get a W-2.
Okay.
Yeah, I wouldn't worry about it from there. I would go ahead and expense it. And then, like I said, anything that's left over on that section 179 is going to roll to the next year anyway. And then he gets it off of this year, if he's got anything left. And, you said you used Drake.
Yes.
They have that Protection Plus, which is an audit thing.
Yes, I have it.
And so I have my clients, because I use Drake, and all of my clients across the board get that every year.
Yes.
Whether they want it or not, just, for my own sake. So roll with it and let your audit protection help you out. Make sure you take good notes and move on.
Okay.
All right. Hey guys, we gotta call it quits here. It's been an hour and a half. I appreciate all you
Can I
guys.
ask a question?
Sure, go ahead.
Can I ask one question?
Yeah, go
All
ahead.
right. I have two clients, husband and wife. They got married in August. They have children together. They've always split these children. If I file them as married filing separate, and the husband who has the higher income this year as married filing separate, it makes a almost $4,000 increase on their refund as married filing separate.
Yeah,
Have y'all
I've heard,
seen this or
I've heard that.
this at all?
Yes, I've heard that pertaining to the advanced child tax credit. So it's basically like a good tax planning tool for your clients, and it's perfectly legal. So, like, say for instance, they filed married filing joint maybe last year, and this year they want to file married filing separate, just to take advantage of like the advanced child tax credit. I mean, not the advance, the remaining child tax credit, whatever the case may be, the advance too. If they file separately, and let's say one of them, the highest earner, he's going to claim the children, and the other spouse, maybe she makes under $40,000. She's not going to get hit with penalties because she's within the jurisdiction of not paying penalties for the advanced child tax credit. Then everything works out. So is that the situation?
I wanted to clarify that because I'm looking at that and I'm like, are you kidding me? I should have been doing this for all these clients. Because I have, a lot of my earned income credit people have been through here, and I've not looked at this until this particular couple, and I'm going, are you kidding? Now, what do you do with the stimulus?
For me, I've been reporting.
If she claimed one child last year and he claimed one child last year, and now this year he's going to claim them both, what do you have to do with that?
I have not done that yet, but in my head, I think I would personally report that they received it, but I'm not sure on that end if that would be okay or not. I'm just referring to the child tax credit.
Okay.
I'd like to chime in right here because on Facebook not Marketplace, listen to me. On one of the Facebook groups with Andrea McDonald on it, I don't know if she's in here tonight. She's part of the Pronto. She pretty much came back on something like that where we were kind of saying, well, yeah, I know you shouldn't. She pretty much came out and said, we're leaving money on the table and we should.
Yep.
So that's, I did a lot of research after that thing. I'm like, there's no effing way, blah, 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 blah. So I started calling everybody that I could think of. And I called the national NCPE, one of the teachers that trains the class. And he said, we take it.
Yep, that's what I heard. And I got this from one of the trainers as well. I got this from Tom Gorzinski. I'm in his plan. I'm in his I pay for his annual service, and he's the one that he instructed us that was okay. And he even provided a revenue code on it. I just don't have it with me.
Yep.
But basically,
okay, so these clients that I've already,
we're like disservicing our clients, basically.
Yep.
Well, these clients I've already filed on, should I go back and check to see if it will benefit them to change to married filing separate?
You'll look like a superhero, but if you have time.
Yeah. And right now, y'all, I'm like overwhelmed with tax returns. I've probably got 50 returns sitting here to get done.
Oh, man.
My key person died last year with COVID, so I'm like overwhelmed.
Yep, so sorry to hear that, but I think it's gonna make a lot of people feel good this year. And it'll make us look like we know exactly what we're doing.
I like that.
Yeah.
Okay, guys, I think we're gonna have to call it an evening here. I thank you for being part of this group, and we'll see you next week.
Thank you.
Thank
Peyosha,
you.
Peyosha,
Thanks.
can you send me that link? I sent you my phone number really quick to text it to me later.